markets have quite clearly given a thumbs up after falling about 1%. Now it's up about 0.2. So the swing has been about some 500 points in the Sensex. First, let me go to Ashok Wadhwa. Ashok Wadhwa, the first 5 positives.
Well, I guess he's accepted that the 4.1% fiscal deficit, despite desire to maintain it, cannot be maintained. And he's given a more realistic number of 4.5. Some challenge in terms of additional revenue collection. But, since we're talking about positives, that's number one. Two, from an FII perspective, he's clarified that, there will be no business income. It will only be capital gains tax. So that's good news. Fund managers who have relocated from India overseas and driven all that economic activity away can now relocate back to India. They can be based here without causing a permanent establishment. So, government will collect additional taxes both from that activity as well as from the salaries. FDI, I think a lot of focus on FDI in terms of defense and insurance. And I think insurance is a low-hanging fruit. So you will be able to collect $10–15 billion from existing global players who have a right to increase their ownership from 26 to 49%. So that's certainly great news. I would say REITs, we've all been waiting for tax pass-through in the REITs legislation, and he's now brought that both in concept, both in terms of real estate as well as infrastructure funds. So that's the other piece of good news. And overall, I think a lot of emphasis on administrative and convenience and easing changes.
Okay, Ratnesh.
Yeah, I think
the good and the bad.
Yeah, barring the little bit of a crinkle or whatever the clarification which one might need on the retro tax, I think rest of the things are somewhat positive, and I don't think I was really expecting really big items from this budget. It is more, the way I read it is, for this government at this point in time, it is more about execution and delivery. A lot of the big items are probably down the road. And I would look very positively at FDI cap increases. 4.5% in the morning, it was seeming like it was 4.1, but 4.5% is also good within market expectations. So overall, I think reasonably positive sort of a budget.
I'll come to you for the specifics, but I believe Mr. Deepak Parekh is with us. Mr. Parekh, your take.
First of all, you must give credit that this government is in power only for 6 weeks. So the time the government has had, the time the finance minister had is very limited. Considering the shortage of time, I think he's done a good job. He has made number of clarifications. He's not gone overboard on anything. He has talked about fiscal prudence. He's talked about inflation control. He's emphasized housing in a big way. Infrastructure, manufacturing, he's taken care of some of these issues which were there. And there's a massive amount of clarity on glaring differences and anomalies which were there, whether it is FII investment, portfolio funds. He's taken new initiatives of clearing REITs and a few other sectors where he's taken. I think on the negative, I would say that he's taken a cautious approach. There is no big bang in anything. There is nothing revolutionary. He has still maintained the 51% limit for Indian companies, for banks, for defense sector, and he's not gone, he's talked about number of PPP projects. I would say we should really look at existing PPP projects and find out and take lessons where PPP has not worked and why it has not worked.
Okay. Mr. Parekh, I'll come back to you on what this, excusing CRR, SLR for long-term bonds really means, especially to your group. But Uday Kotak is also with us. Mr. Kotak, on this particular issue, since it impacts the bank and perhaps an emerging rival in IDFC and other proposals, first takeaways.
My first takeaways on the budget are, this is a excellent budget. It is a positive budget. It is really focused on first being real on fiscal deficit at around 4.5% of GDP. I think it is far more realistic than what we have estimated earlier. At the same time, I do feel that there is an element of big picture. There is a focus on infrastructure. There's focus on sectors like urban renewal, education, road transports. So I actually think on the big picture, a roadmap is laid down. At the same time, the nuts and bolts are also taken care of. I think it's a positive for markets. There is also a very significant change, which is the tax arbitrage on debt funds seems to have been removed. That's certainly making it a much more level playing field between fixed income mutual funds and bank deposits on the one hand, and also dropping the hurdle rate for alternate investment in equities. That is also a positive for the equity markets.
Rajiv, if I can come to you, this budget holds good news for you because the SLR and CRR on infrastructure loans have now been, will not be there. Is it only for prospective loans or is it for past loans as well?
I have no idea. I've only heard what has been announced. So we will find out.
Okay, but is this anyway good news for you because is this anyway good news for you because you will transfer your loans from IDFC into the bank, and that will in a sense be new loans to the bank. So is this very, very good for you?
Yes. Yes, there's no doubt about this being very good for us. Yes, that's absolutely true.
Okay. Mr. Kotak, will that mean a big difference for banks like you also, not having to pay CRR, SLR in monies raised in the form of long-term bonds?
Yep, I mean, obviously, therefore, for new infrastructure lending, that is good news because it reduces the preemption costs within the banking system, certainly a positive. And I, all in all, feel that this is a very good roadmap which has been laid down for the next 5 years.
Okay. Mr. Kotak, just stay on. Dr. Rangarajan is with us. Dr. Rangarajan, the minister said that he would aspire towards a 4.1% fiscal deficit, but at the moment it's 4.5%, and the assumed rise in tax revenues is 19.7%. The VOA put it at 21%. 19.7 when GDP growth is struggling under 5.4% or maybe struggling barely above 5%. Is this an unrealistic assumption? Will he be able to deliver?
Well, anyway, broadly speaking, the directions set in the budget are appropriate and welcome. I think the reiteration on the fiscal consolidation is particularly welcome. But whether he will be able to get to 4.1% is not very clear. But the whole thing hangs on how the revenues will be procured or revenues will accrue, and what actions will be taken on subsidies. I have not taken a look at the extent of subsidies that have been provided. Ultimately, the way in which the fiscal deficit can be curtailed or can be contained is by taking action on subsidies. Therefore, much will depend upon their ability to be able to contain the subsidies. Yes, the revenues do appear on the face of it a little optimistic, but hopefully the minister will try and see to get as much revenue as possible. But the one thing that is required is that if the revenues are not forthcoming to the extent indicated in the budget, they must be willing to take action on the expenditure side.
Okay. Well, Dr. Rangarajan, just let me update on markets. It's a huge swing, and now to the positive, 1% higher on the Sensex and the Nifty after fairly decent gains that we have seen over the past 2 weeks itself, despite the trimming recently. Mid-cap index as well up 1.28%, and it's infrastructure and real estate stocks that have really shot up. Real estate, obvious beneficiary because of the REITs that they will be able to launch, the tax benefits that REITs have got, as well because FDI has been now permitted with the threshold lowered for real estate projects, as well the extension in terms of time. Well, let me get Mr. Ramesh Damani in very quickly on this. FIIs now, the tax will only apply on capital gains. It will not be treated as income. Is that the reason why we are seeing such a fairly decent recovery and then rally in the markets?
It could be, of course, these budget provisions are really fresh, so I have not been able to go through them carefully. But typically, they are the largest marginal investor in India, so anything that favors them tends to be buoyant in the market. I think basically delivered a Google budget, Lata. He did no evil, so hopefully the market can live with that.
Okay. Well, Mr. Kotak, what's your sense? Clearly, equity markets have given the budget a thumbs up so far, from being about 2% lower when that retroactive tax changes did not come. The market has climbed so much in the past 2 hours. Do you think this incentives given to FIIs, especially on the tax front, is going to be big?
I think in addition to FIIs, Lata, there is a focus on financial savings. Therefore, the limit from 1 to 1.5 lakhs and measures like that will have a significant add-on impact in terms of domestic savings moving into financial savings. If you look at the last 4 or 5 years, a lot of India's savings were going into gold and real estate. We need those savings to come into the organized financial sector. And I do believe that this budget has made an attempt to move in that direction. One of the other issues which I have always felt is that the more level playing across different entities in the financial sector we achieve, more is the efficiency of the sector to attract financial savings. And I see that as one of the biggest opportunities from a market's point of view, which is savers coming back to equities. The last time we saw it was prior to 2008. And we are probably going to see it after a gap of 6 years.
Ashok, are you clear on what he said about the dividend distribution tax? Am I right to say that now taxable in the hands of the investor, not in the hands of the company?
Yeah.
Is that positive?
I haven't read the fine print, but as I heard the finance minister, he is going back to the old regime where dividend tax will now be paid in the hands of the recipient versus the distributor, which effectively means that the taxpayer is going to pay the tax versus the distribution company. Incidentally, it also makes Mauritius a little more attractive once again. Not that dividend is the reason why companies would want to invest in India, but do remember that there are certain treaties under which the dividend distribution tax has been reduced to 5%. So, when the tax shifted from the taxpayer to the corporate, this importance was obviously misplaced and was lost. But now that it's gone back to the taxpayer, clearly it's advantageous for foreign companies to invest through Mauritius. So I think that's the change, yes.
All right, Dr. Rangarajan, overall comment on the budget, sir. Do you think it has done enough? Is it very good for infrastructure companies? There's a lot of money that's been pumped into NHAI. The investment allowance advantage has also been extended. It will now be available up until 2017, available even at a lower threshold of investment. Your comments otherwise, 19.7% tax revenues is big, but over the next 3 years, do you think this budget has delivered something in the form of increasing capex? What are your overall comments on the budget?
Well, I think the sum total of the various measures introduced could lead to a further flip in investment, and not only in infrastructure elsewhere too. But much of the thing depends upon, as I said earlier, how it gets implemented. But certainly there are certain incentives which have been provided both for savings and investment. I particularly think that the setting aside of 10,000 crores for startups and is a very good idea. I think that there is a need for promoting investment of that particular type. And besides that, there are many other proposals that have been made to increase the savings. Certainly, this is an area which required some attention because we have been seeing over the last few years the household savings in financial assets has been coming down. So some fillip in that area is required. Therefore, there is a certain amount of investment which is also promised. Say like National Highways Authority and so on. I have always been saying, in a situation in which where private investment has been somewhat slackening. A larger share, a larger initiative on the part of public investment is required. There are many things that have been provided in the budget. If that gets implemented, it will itself act as a stimulus for private investment as well.
Thank you, Dr. Ranjan. Let me just take that point on to Mr. Uday Kotak. Mr. Kotak, do you think there's enough in the budget to get the investment cycle back on? Mr. Rangarajan spoke about greater public spending, which could act as a catalyst for private investment. There is the investment allowance of 15% now. The threshold investment has been dropped from 100 crores to 25 crores. Is all of this enough to get the investment cycle back?
You know, as banks, one of the sectors we really focus on are what we call as SMEs, small and medium enterprises, and mid-market companies. The fact that a company at 25 crores of capital investment can now get benefit of investment allowance is a huge positive for the middle India. And this is an extremely important aspect which I think we must focus on. And I think it is things like this. You want to build India brick by brick. It is a granular build out which we want, and therefore some of this nuts and bolts which was explained in detail, and this budget speech, as we know, has been longer than the normal budget speeches. And I think it's things like these, the point on venture capital funds. India needs to be a country of entrepreneurs. We need to encourage entrepreneurship. We must find ways of how startups can get funding. So things like this actually set up a roadmap. Of course, big infrastructure projects, big ideas are important, but it is the nuts and bolts which needs focus in India, and that's what I think the government is finally saying.
Okay, thank you, Mr. Kotak, on that. Manish Chokhani has also joined in. Manish, first key takeaways: markets have actually, swung from intraday lows to highs. It's a good 600-point recovery.
Yes, Lata, I think initially the markets may have been expecting a very big bang, flamboyant budget. And those who know Mr. Jaitley would know his style is not to be flamboyant but to be much more mature and pragmatic. And I think the signal given is that we've inherited a government. Even the ink on my finger hasn't dried yet. It's 45 days since they've taken power. So I think signaling that we've taken over, let us absorb what the issues are, and he's named a number of issues. But the key changes being that we will adhere to fiscal prudence. We will stop this, free giveaway mentality. We will stop this adversarial mentality with the taxpayer and the average citizen. And as he said really in his first 5 or 10 minutes, that these were really the broad contours on which, you should expect really the next February budget to be where they could get to grips with really, more substantive issues and apply their mind. So I think from a realism perspective, he's done really a good job. The headlines from a foreigner's perspective is that the country is back on a path of fiscal prudence. They've opened up a few sectors importantly like defense. I think REITs is a very, very big move and can attract serious money. The clarifications on the foreign portfolio investment manager rules is very significant. And for the investment cycle to revive, to bring down the limit for medium and small enterprises on investment allowance to 25 crores and above is certainly significant. So while it's not what people may have dreamed about, at least it's put into kind of the realm of reality that these are the kinds of things we intend to do, and don't keep speculating on what you wish and what you think we will do. This is what we will be doing over the next 4 or 5 years. And hopefully things don't happen only in the budget, but like you saw the advisory going out to tax officers and excise officers, you saw the labor sector reforms coming out. So there are a number of things which a government does, which don't necessarily have to come through the budget. So overall, I would think they're demonstrating that they've taken over and they're applying their minds. They're not in a hurry to hit the ball out of the boundary as yet, but certainly all movements in the right direction.
Rajiv, if I can come back to Rajiv, Vice Chairman.
Mr. Dinesh Kanabar, we didn't go to him since there are a couple of important tax changes announced. Mr. Kanabar, first key takeaways.
In fact, so many positive tax changes which I would never have, but you and I spoke before the budget, and I wouldn't have in my wildest dream thought of so many changes and so many positive changes. We spoke about some of them, your earlier panelists spoke about some of them, whether it is in terms of providing clarity on foreign investment by FIIs as being capital gains and not being business income. But more important, two very key takeaways. The extension of authority for advance ruling to domestic taxpayers and constitution of multiple benches. A very, very important pronouncement, and I think if implemented right, this could really pave a way for a non-adversarial tax regime, because if you could go to the tax office in advance and ask them what was your liability and deal with it, that would be the best way to take things forward. The other issue has been on transfer pricing, where there has been huge amount of litigation, where foreign investors have been very wary of India. And again, providing to say that if you have got an advance pricing agreement, it will be rolled back for a period of 4 years. Very, very welcome. I would think these are very key changes. I did hear Ashok speak earlier about whether the dividend provisions are being put back in the hands of the taxpayer. I really couldn't get that from the speech, and I've just been wondering whether I heard him right or not. But if that is so, again, it's going to mean that people will be able to get away out of a number of litigation which exist on deductibility of interest and the likes. All in all, on just tax positive, I'll be very, very positive.
Okay. Rajiv, we asked you first specifically about something that affected your company, but your overall take on the budget.
Well, I think people are being generally a bit shy of giving this budget high marks. I had a couple of weeks ago actually written an article in which I'd set out my expectations for the budget, and I had 3 things in it. First was a very strong signal in terms of boosting confidence by softening or improving or signaling a significant improvement in tax administration and changing the perception that the tax authorities are basically adversarial. So that was one big ask I had. Second big ask I had was signaling an important shift in the quality of government expenditures. I was never too focused on, being too deterministic or narrow in terms of reducing the size of the fiscal deficit itself, but importantly, signaling an improvement in the quality of expenditures. And the third thing I was hoping to get was some signal on how are we going to recapitalize the banking system and how are we going to recapitalize the balance sheets of corporate India. So on all these 3 measures, I think this budget has done actually a pretty credible job under the circumstances. On tax administration, which is not something that is very fashionable to talk about, but the very clear signal is a lightening of the hand and an improvement of the government stance towards business. So that's very important.
Okay.
On improving the quality of government expenditures, the accent on infrastructure, the accent on rural supply chains, the accent on housing, the accent on railways, on urban India, all these are extremely welcome and will signal a very strong commitment to growth.
Yes, Mr. Lall, just coming to you, Mr. Ramesh Damani, the market's now up about 1.7%. That's a 425-point salute from the Sensex. The Nifty up 127. And if you took it from the intraday lows, I think the market is up about 800 points, or at least 700 points. Nifty as well must be up about 250 points. As an investor, how are you looking at this budget? Do you think now the market is reaching overvalued levels, especially real estate stocks? DLF up about 11%, Prestige Estates, I could go on, all those supposed REITs beneficiaries. IDFC up 7.6%. Your comments on all this?
Yeah, Lata, I don't think the market is at an overvalue stage. Market was, I guess, jittery ahead of the budget, and there's nothing really in the budget to, in my opinion, to make it that enthusiastic. But we're in the middle of a bull market, and the market continues. And the fact that he's taken fiscal responsibility, fact that there's new tax and spend programs, I think encouraging FI investment, markets are taking those key takeaways, and I think the market is responding to those numbers. There's no more social programs that are going to suck at the subsidy bill. So market's latching onto those events. I don't think market is overheated. I think the market probably has ways to go yet. We're still in the young stages of a new bull market.
Okay. Well, Ratnesh, your take. You've had enough to digest. Markets not quite come to that 7850 levels, but 7,700 at this point in time. You think there's enough juice for it to stand on?
Yes, absolutely. I think if you look at it, one thing which I really like about this budget is the fact that there's a recognition that government expenditure is not going to get the growth going or the investment cycle recovering. So a lot of things have been done, whether it's on infrastructure or investment allowance, which is essentially facilitating a better investment situation and getting investment back going. Because that is the most critical thing in terms of, so obviously the budget is not going to get any earnings upgrades or those kind of things.
No, won't it get on, say, a DLF on real estate?
Yeah, some NHI, whatever. Some really small, segments of the market. But for overall market as a whole, while it may not impact the earnings forecast right now, but it does enough to give confidence to the market, A, that there is fiscal responsibility, and B, the steps are being taken to get the investment cycle going. First few...
the investment allowances, you mean?
Investment allowance as well as infrastructure. Not just for infrastructure, but how the banking sector could come into it in terms of financing of it. So I look at it fairly positively from a long-term point of view, and it definitely does not change the view which I expressed to you in the morning that by March, hopefully, we are at 8,500 to 9,000 on the Nifty.
Does it increase that level?
Oh, I think that's a good enough level. Okay. And then after that, we can take a call again.
Oh, absolutely. Sudhir Kapadia is also with us. Mr. Kapadia, first, a few takes on the budget, positive and negative on the tax front.
I think there are 2 or 3 very interesting proposals. No one yet has talked about the retrospective amendment bit, right?
Yeah.
A lot of expectations on that one. And I think the important point there to note is 2 things. One is that the mechanism which is being proposed, some kind of a high-level committee, what is not spelled out and what one wonders, is it some kind of a mediation or a settlement idea which is being mooted? Because frankly, I don't see what else will that committee be able to do. The law is what the law is. There is no ambiguity in the retrospective law. So is this an attempt to try and say, let's collect the taxes, let's waive the interest and penalties? Is it a one-time settlement mechanism for old cases on indirect transfers arising out of the retrospective amendment? That's one interesting part. The second one, about which there is some ambiguity, I heard some comments before me, one is that the dividends which Indian companies will receive will now be taxed at 15% concessional rate kind of forever. There is no sunset clause, which is great. But there is also a provision not mentioned explicitly in the budget speech, which seems to suggest that we are going back to the old system of taxation of dividend income. If that is the case, I think this is a fairly smart move in many ways from a finance minister's point of view. What does it do? In most cases, the promoters who were earlier earning dividends from their companies, which they have a very large stake in, for example, the company would end up paying the tax.
Yeah.
They would not be taxed in their hands. Now that will shift to their hands as far as the Indian promoters are concerned. As far as foreign investors are concerned, right, what will happen is the point made about Mauritius, for instance.
Yeah.
Countries have moved to territorial basis of taxation.
Mr. Kapadia, I'll have to just come back to you in a minute. Mr. Ramesh Damani has other engagements and we have to relieve him. Mr. Damani, what would you buy now, actually? Do you think real estate now becomes attractive because some concessions have been given? Do infrastructure become attractive? NHAI given that huge amount of money and clear concentration of the government on that sector, road builders, construction companies. And basically, would you really upgrade the index targets itself? They seem now to be better ready to get more FII money since that huge tax clarification has come. Their income will not be treated as income but capital gains. So do all these make you raise the target of the market itself?
Lata, luckily a lot of people in this market have been bullish all through, and we are almost fully invested. I'm personally 98% invested, so there's really little room to buy something else. But what we will do is study the budget proposals. You have to go through them very carefully. Huh? If I were to buy, what would I buy? Probably technology. Mid-cap technology seems like a fairly cheap area right now, so I would tend to buy those things.
Okay, no, budget related, you were completing your sentence about, say, infrastructure or about incentives given to FIIs. Would you raise the market level itself now that, 8,000, 8,500 becomes attractive because there are some of these clarifications for FIIs?
Yeah, I would raise the target. We are on the ongoing process of bull market. Particularly what things I would buy because of what the budget is, unfortunately require me at least 24 hours to try and figure that out. I think any answer right now would be more of a knee-jerk reaction. So I remain bullish though. I mean, I just want to make that point that the market is probably headed far higher than today's levels suggest.
Okay. Ashok, we went into the budget very, very high expectations.
Okay, I just wanted to tag Ramesh the one for staying on. Yeah, go ahead.
All right. Have the expectations been met? Has the boosted confidence both for the institutional investors, stock investors, as well as investors who will come in and invest on the ground?
Manufacturing investors.
So to just go back to all the panel discussions before the budget. What did we say? We said if he can come up with a more honest fiscal deficit number and lay a path for fiscal management, if the mathematics works out right, then we think he would have done a good job. I think there's a tick mark on that for sure. 4.5%. There is a aspirational hope. I use the word in terms of revenue collection.
But on tax revenues, for sure.
For sure. Other than that, I think it's a very realistic mathematics and a very real number at this stage. We would have said if there is going to be focus on manufacturing, it augurs well because that's been the platform on which NDA has been elected, and we want manufacturing for creating more jobs. There is adequate focus on manufacturing, venture capital allowing Indian entrepreneurs to access capital, which has been shortage. Investment allowance, including reducing the threshold, as Uday said, is very welcome. Increasing the sunset clause to 17 and allowing manufacturing companies to continue. Lots of small things, but all very positive towards manufacturing.
Fair point.
We would have said if there is focus and positive news for infrastructure, it's good. Lots of things, airports, ports, roads, expenditure for roads, tax concessions, power concessions, all very, very positive.
So trying to get private investment in by putting in public investment.
I take your point. The last item would have been foreign FIIs, and we've already spoken about it. Clarity of tax regime is very, very positive.
Okay.
Well, we also have Mr. Deepak Parekh, and I think in a second Mr. K.V. Kamath will also be with us. Mr. Parekh, your thoughts now that you would have gone through the details. This long-term bonds by banks will not attract CRR, SLR. Your comment on that and other things, and basically whether that will mean that it will be easier for HDFC and HDFC Bank now to merge.
No, I don't know about that, but I think it's a revolutionary move by the finance minister, I'm sure in consultation with the RBI. You see, infrastructure funding had become a bad word for the banks because of the the quantum of restructured loans and, the shortage of approvals and raw materials and a host of other issues. So no bank was really willing to look at funding infrastructure because of the legacy issues. Now giving an incentive to banks that if you fund long-term infrastructure, you will get some exemption of SLR, CRR, your assets won't qualify for PSL. I think this is a totally out-of-the-box thinking. We've never heard something like this, and the government, RBI, should be complimented for this. I think this will enable banks to lend to infrastructure and lend long terms. And the finance minister also said that banks can then borrow long-term funds in the bond market to lend for long term.
As an extension, do you expect this to be extended to housing as well? Because housing is again long term. It's a big need for the economy.
We have to see the detailed speech because I cannot comment on that.
At the moment, I don't think he said housing.
I hope it includes housing because housing is 15-year loans.
Yeah, we'll have to.
He didn't say housing, but you have to look at the detail. Yeah,
fair point, sir. I'll just ask Mr. Kamath if he shares that positivity that you just expressed. Mr. Kamath, on this long-term fundraising by banks not attracting CRR, SLR, and your other key positive and negative takeaways from the budget.
I can't hear you clearly.
Okay.
Lata.
Well, there is this long-term funds that banks can raise which will not attract CRR, SLR. Your comments on that, is that a major game changer for especially infrastructure lending by banks?
Yeah,
All other positives that you can think of.
Yeah, indeed, I think it's a huge plus. It's a huge plus.
Go ahead, sir.
Yeah, it's a huge plus. In fact, I wish we had this 12 years back when we were looking at our own merger. It would have been a different situation. So I would think this is one of the highlights of this budget, that leave aside banks and their ability to merge, you're now able to actually get funds for a long-term activity, which all these years we had a challenge. Hopefully that will come into effect very quickly. My quick take on the budget, it ticks all the boxes, and more importantly to me, it shows a willingness to listen. Listen to what are the challenges and state that I have listened, we the government have listened, and we will act in due course. To me, that is a statement of intent which I will take entirely at face value, and I believe that in the next 6 months we will see action on this front.
Okay. There are also concessions given on investment allowance, sir. Do you think enough has been done to kickstart or at least somewhat accelerate the capex cycle, Mr. Kamath?
I would think all other ministries also will need to show they are on the same table. And I expect that to happen in quick order, because we get feedback that the Environment Ministry is now much more proactive, that ministries are working in a coordinated manner. Paperwork in a way is getting reduced. There is direct talk between ministers and so on. All this is hugely positive, and this buzzes us to improve, and then you have to see action. I would think in the next 3 months we will see people, that is clients, ready with projects getting onto the front burner.
Your friend Mr. Parekh is also listening in, but Mr. Kamath, you said 12 years ago if this long-term CRR, SLR forbearance had been given, you would have been a much happier man. If you were in Deepak Parekh's shoes, would you be merging HDFC and HDFC Bank?
His shoes are too big, I can't fill them.